Raja, Bharat, and Vedika were partners in a firm, sharing profits and losses in the ratio 2:2:1. The balance sheet as on 31st March 2024 is given to us. All right. And Vedika died. Vedika died on the 31st of July 2024. According to the partnership deed, her legal representatives are entitled to the following. And we have to look after these adjustments. What you need to keep in mind is they only want us to make the deceased partner's capital account. That's it. We don't have to do reval, partner's capital, balance sheet, nothing. All right. So we have, okay, in the books, right? So let's go a little up. In the books of the partners, in the books of, okay, and we have Raja, Bharat, and Vedika. Raja, Bharat, and Vedika. And we have under that Vedika's capital account. Right? Debit side, credit side. And the first thing we do, credit side, is write the balance brought down. Okay, so balance, by balance brought down. And now I'm going to go line by line and see what we have. Creditors, we don't have to do anything. Keep in mind, the adjustments is the balance in a capital account, obviously, interest on capital at 8%, fine. Okay, her share in the profit up to the date of death, which is what we normally do, P&L suspense account. Okay, why? Because the balance sheet is as on 31st March 2024. She's dying on 31st July 2024. So whatever profits have happened in that period, that has to be given to her. Her share has to be given to her. Anyway, and goodwill calculation. We don't have any adjustments to do with any of the assets or liabilities. We only have to think about Vedika's balance and break up the general reserve. The general reserve is 50,000. It has to be broken up and given to the partners in their ratio. Vedika's share is 1 by 5. So 50,000 into 1 by 5 is going to give me 10,000. All right. So I'm done looking after the general reserve. I know that the balance is 90,000 in her capital account. So I'm going to go and put by balance brought down 90,000 and by general by general reserve we have 10,000. Okay, the next step is, okay, so we are done with this. We have looked after the reserve. Our next step is calculation of interest on capital, and our interest on capital is going to be equal to the principal, which is 90,000, into time. And count from 31st March to 31st July. We have April, May, June, July, 4 months. Okay, so into 4 by 12 into 8, okay, into 8%. Percent means upon 100. Okay, and we simplify this. 4 ones are 4 threes are 3 ones are 3 threes are, and of course the last step we missed out the zeros. Okay, so 300 into 8, which is 2,400, which is interest on capital, something that we have to give the partner. So on the credit side, by interest on capital, by interest. Again, have a habit of writing account everywhere. General reserve account, on interest on capital account. Okay, and we just calculated 2,400. 2,400. Okay, so next adjustment. Interest on capital done. A share in the profit up to the date of death. We calculated on the basis of last year's profit. Vedika's share is 3,000. Now, you need to keep in mind that normally they give us the total profit of the firm. In that case, the deceased partner's share, the deceased or dying partners or dead partners, whatever you want, the deceased partner's share, the deceased partner's share is going to be equal to profit till date, profit till date, okay, into time. In our case, it would have been 4 by 12 into share, okay, into whatever the deceased partner's share is. But we don't have to do any of this because it is given to us directly given. Okay, so we simply pick this up and put it as P&L suspense account. Okay, by profit and loss, by profit and loss suspense account. Okay, as it is 3,000. Next. Okay, so we are done with this as well. A share of goodwill calculated on the basis of 2 years purchase of average profit of the last 3 years. So goodwill is equal to average profit into number of years purchases. Okay. And frankly, they've given it to us directly. We don't even need this formula. Is equal to uh, into 40,000. Okay. So substituting 40,000 into 2, which gives me 80,000. Then what else do I need to keep in mind? This is the total goodwill of the firm. All right. Vedika's share. Vedika's share is going to be 80,000. 80,000 into 1 by 5, which gives us 16,000. But this 16,000 is going to come to us from the remaining partners. And for that, we need to find out the remaining partners' gain ratio. All right. And they have not given us a new ratio. So if one partner dies, okay, that partner is no longer there. Whatever is left, we just find that ratio. Okay, so we are going to end up with 1:1. Okay, 1:1. So that 16,000 that we have, okay, I'll do it downstairs over here. 16,000 will be contributed by the remaining partners, Raja and Bharat, in the ratio 1:1. So if I was to do 1 by 2, I will get each partner's contribution, 8,000. The journal entry in this case would be Raja's capital account debit 8,000, Bharat's capital account debit 8,000, to Vedika's capital account 16,000. Why? Because they are gaining at the expense of Vedika. Vedika going forward, okay, because she's deceased, she will she will no longer be earning a share in the future profits. Okay, who's gaining that? Raja and Bharat. So it simply debit the receivers, credit the giver. All right, now I'm going back to the account and I'm simply going to put them in. All right, so by Raja's capital account, by Raja's capital account 8,000, and by Bharat's capital account, Bharat's capital account 8,000. Okay, and now that we are done with this, okay, we have one last sentence to look at. Vedika's drawings up to the date of death is 12,000. Debit the receiver. She's taken something out. We don't know whether it is money. We don't know whether it is goods. So we will simply say, okay, how much is it? 12,000. So we will simply say two drawings, two drawings and 12. Okay, with that, we are done with most of the sum. The last step, okay, we have to decide how much we have to give the executors. And that is going to be the balance of Vedika's capital account. Right, so it is similar to what we do in the case of retirement, but in the case of retirement, the balancing figure could be cash or the exiting partners, retiring partners loan account. In this case, it's going to be to the executors account. All right, so we take a total. All right, and if we add this up, Okay, we have 1 lakh. Okay, 1,16,000 plus 2,400, which is 1,21,400. Okay, the total of the heavier side we write on both the sides like this, and then we subtract everything on the lighter side. So I need to subtract 12,000 from that number. Okay, and 1,21,400. If I was to subtract 12,000, okay, it should be about what, 1,09,400. So two, two Vedikas, two Vedikas, executors, executors account, executors account, 1,09,400. All right, and of course, be neat. With that, we are done. Any doubts, feel free to ask. And as always, please like, share, and subscribe. Thank you.